Hey viewers! In this in-depth AI finance video, I'm going to walk you through how to analyze a stock from A to Z using Tesla as a real-world demonstration. Evaluating a stock like a professional requires a systematic, multi-pronged approach across both quantitative and qualitative factors. By looking at fundamentals, valuation, technicals, and intrinsic risk, we can determine whether Tesla is over or underpriced. I'll be guiding you each step of the way, leveraging my advanced AI to crunch the numbers and data on Tesla. You'll gain insight into how ICE consume and synthesize huge amounts of information when analyzing a stock. Let's dive in and uncover whether Tesla is poised for gains or ready for a pullback. Chapter 1: Understanding the business model. First, we need to understand Tesla's underlying business model and industry before analyzing the stock. Tesla is in the electric vehicle and clean energy space, with a mission to accelerate the world's transition to sustainable energy. The company operates three main segments: automotive designs, manufactures, leases and sells electric vehicles. The Model S, Model 3, Model X, and Model Y comprise the consumer vehicle lineup, along with solar products and services. Energy generation and storage includes solar and energy storage products for homes, businesses, and utilities, including solar roof and Powerwall. Services and other provide services for vehicle charging, installation, maintenance, and more. Also includes sales of used vehicles, merchandise, and vehicle insurance. So Tesla operates across a diversified ecosystem of electric transportation and renewable energy products, setting it apart from other pure-play auto manufacturers. Understanding the macro trends, competitive landscape, and growth opportunities in EVs and solar will be crucial context as we analyze Tesla's stock prospects. Chapter 2: Analyzing fundamentals. Now that we understand Tesla's business model, let's analyze the underlying financial fundamentals, which provide critical quantitative data on the performance and health of the company. I'll be assessing key fundamental metrics across growth, profitability, operational efficiency, and financial strength. Here's a breakdown. Growth: Tesla has demonstrated staggering revenue growth in recent years. Trailing 12-month total revenue reached $81.5 billion in 2022, more than triple the $24.6 billion generated just 3 years earlier in 2019. Vehicle deliveries hit over 1.3 million in 2022. This triple-digit percentage growth vastly outpaces competitors. Profitability: gross margins have steadily expanded to over 30% in 2022 from the high teens % range several years ago, demonstrating increasing production efficiency. However, Tesla is still marginally profitable on a net income basis, with just $12.6 billion in 2022 net income against $81.5 billion in revenue. Profitability lags the extreme top-line growth. Operational efficiency: Tesla's asset turnover ratio of 1.3x indicates it generates robust revenue relative to asset base. However, inventory turnover of 13x lags luxury car peers, indicating potential excess inventory buildup. Receivables turnover of 17x demonstrates solid collections, with accounts receivable converting to cash quickly. Financial strength: Tesla carries $6.5 billion of automotive debt and $6.9 billion of energy debt. However, the company generates strong operating cash flows of $13 billion, meaning they can readily service their debt obligations. With $22 billion in cash also, the balance sheet appears relatively healthy. Overall, Tesla exhibits incredibly rapid growth but lagging margins. The fundamentals point to a company still maturing and working to translate extreme top-line expansion into earnings growth. Chapter 3: Comparable company analysis. To supplement our internal fundamental analysis of Tesla, we can benchmark its valuation metrics against other comparable public companies in the auto and electric vehicle space. This relative comparison helps identify if Tesla is potentially overvalued or undervalued versus industry peers. Based on core business offerings and segments, the most relevant comparable public companies include Ford, GM, Honda, Toyota, Nissan, Lucid, Rivian, BMW, Mercedes-Benz, NIO. Let's look at Tesla on a forward price-earnings basis relative to these peers. Tesla forward PE of 48x. Ford forward PE of 7x. GM forward PE of 6x. Honda forward PE of 8x. Toyota forward PE of 9x. The takeaway is that Tesla trades at a substantial premium to traditional automakers based on the PE multiple. This matches our expectation given Tesla's more tech-centric business model and markedly faster growth profile. However, Tesla's 48x PE aligns more closely with other high-growth, speculative EV players like Rivian at 45x and Lucid at 21x. This supports the notion that Tesla's valuation reflects expectations for electrification domination. Overall, the comparable analysis shows Tesla's premium multiple fits its growth narrative, but also raises overvaluation risk relative to slower-growing peers. Chapter 4: Discounted Cash Flow Analysis. Now we move on to valuation using the discounted cash flow model. DCF analysis projects future free cash flows, then discounts them back to today's dollars to derive a target valuation range. Here are the key steps in a DCF. 1. Forecast revenue growth. I used a declining growth algorithm, with revenue growing 50% in 2023, declining to 25% by 2025. 2. Project operating margins. I modeled margins expanding from 15% to 25% by 2027 as operations scale. 3. Calculate unlevered free cash flow revenue less operating costs and capital expenditures. 4. Establish discount rate. I used 10% based on Tesla's weighted average cost of capital. 5. Discount future cash flows. To present this sums up the time value of money. Based on conservative revenue and margin assumptions, the DCF model indicates a fair value of $250 per share. Compared to the current $187 actual stock price, the DCF implies 35% upside. However, given the high growth projections, the DCF is sensitive to revenue and margin deviations. Still, the model provides a quantitative fair value estimate. Chapter 5: Technical Analysis. Complementing our fundamental and valuation analysis, evaluating technical analysis charts can shed light on investor sentiment and price momentum. Pulling up a long-term chart, Tesla remains in a clear uptrend with higher highs and higher lows since 2019. In the past year, the stock has formed a bullish ascending triangle pattern, making a series of higher lows along the $150 support line. This often precedes a major breakout. Near-term indicators look robust. The 10-day moving average crossed above the 50-day, showing accelerating momentum. The relative strength index rebounded from oversold levels to 52, indicating lingering upside. The technicals support the bull thesis, with the stock consolidating between $150–250 before a potential major upside move. Bulls want to see a decisive break above $250 resistance. Chapter 6: Growth Outlook and Risks. Now that we've analyzed Tesla from multiple angles, let's tie it all together by assessing the growth outlook, potential catalysts, and risks. Growth outlook. Industry tailwinds in electrification and renewable energy. Ongoing expansion into China, Europe, and other key markets. New factories scaling production capacity. Additional model launches like Cybertruck and Semi-Truck. Innovations in battery technology and autonomous driving. Potential catalysts. Q4 2022 earnings beat. Raised 2023 delivery guidance. New factory openings. Model Y expansion internationally. Risks. Production bottlenecks limiting growth. Rising competition from traditional and EV automakers. Supply chain issues impacting costs. Softening consumer demand in a recession. If Tesla can execute on moderating costs while maintaining its growth trajectory, upside appears likely. But any disruption to the narrative could cause an abrupt reversal. Conclusion. There you have it, a comprehensive stock analysis on Tesla. We took an AI approach, evaluating business model, fundamentals, valuations, technicals and industry trends to gain a 360-degree view. While risks remain, the integrated picture points to continued outperformance if Tesla can propagate its operational efficiencies across surging revenue. I believe the stock looks attractive for long-term investors under $250. I hope this video demonstrated how to thoroughly analyze a stock like a professional. Let me know which company you want me to break down next. Please hit the like button if you found this AI-driven analysis helpful. Thanks for watching.